Something major just happened in the silver market, and the world is still trying to understand what it means. Silver did not rise slowly. It did not move cautiously. It moved with force, with pressure, and with a speed that shows something deeper is shifting under the surface. The price action was dramatic, yes, but the real story is not the price. The real story is why the price moved the way it did, and how the entire financial system reacted when silver started telling the truth. This moment is important because it connects everything happening right now: supply shortages, industrial demand, global debt, a weakening currency system, falling confidence, and the stress building inside the futures market. Analysts like Schectman have been warning that silver would eventually expose what has been hidden for years. And this week, silver finally pushed the door open.
One big trader who took possession and would not roll it over a stamp for cash delivery, perhaps an Asian trader who wanted over 400 million ounces of silver, give it to me. And so, all of a sudden the cooling breaks down over Thanksgiving in one of the most thinly traded markets of all. So there's virtually no activity, but just those servers broke down. Right. So the point of it is that this signals, just like the LBMA said, sorry, it's not L plus or T plus 1, it's T plus 8 weeks. Right. We don't have enough manpower or trucks. The Western system is crumbling under their own narrative, and they are losing trust. And that ain't good when a system is completely built on trust and it starts to, as the water recedes, what's the old adage, you see. Right. And I think that's going to be a grotesque picture before it's all said and done. And that's why I think you're seeing a different narrative unfold amongst these banks, that maybe the game is over and survival would mean breaking ranks and covering and getting out. You see one of those European banks do that, and then the whole game just implodes as the price skyrockets and shorts get squeezed and they cover, pushing the price up higher. This is a big deal, and I think it's just beginning right now.
Silver's rise did not come from excitement or hype. It came from tight supply, real demand, shrinking inventories, and a financial world struggling to maintain stability. For years, above-ground silver has been quietly disappearing from vaults. COMEX registered silver has been falling. LBMA stocks have been declining. Industrial users have been taking larger and larger amounts, and investors have been holding more physical ounces than ever before. This slow drain is usually ignored, but when price pressure builds, the market is forced to confront the facts. Silver is moving because the physical world is moving, not because of paper contracts. The industrial side is a critical part of the story. Silver demand for solar panels is at record highs. The world is installing more photovoltaic capacity every year, and every panel needs silver. Electric vehicles need silver too. High-voltage components need it. Battery systems need it. Autonomous systems need it. Electronics are using more silver. 5G infrastructure is using more silver. Medical devices are using more silver. Aerospace and defense sectors are expanding their silver use. This is real, physical demand. It does not disappear when the economy slows. It keeps growing because modern technology requires it. Silver is not optional. It is essential. On the supply side, mining is not keeping up. Silver mining is limited because most silver is produced as a byproduct of other metals. You cannot simply increase silver production by raising the silver price. You need more copper mines, more zinc mines, more gold mines. But these take years to build, years to approve, and years to operate. Primary silver mines are rare, and even they cannot expand quickly. This is why supply remains tight even when prices move up. Silver production cannot respond fast enough to meet rising global demand. This structural imbalance, high demand and limited supply, creates long-term pressure. And that pressure has now reached a breaking point. Inventories have dropped so low that every large order affects the market. You can see it in physical premiums. You can see it in mint delays. You can see it in delivery stress. This is why silver jumped so quickly. The market finally reacted to a shortage that has been building for more than a decade. But the price movement alone is not what shocked the world. What shocked the world was how the system reacted. When silver started climbing, something unusual happened. The exchange went dark. For almost 10 hours, trading froze. Screens stopped updating. Orders failed. Markets went silent. The official explanation was a cooling issue at a data center. But cooling systems have backups. Professional data centers have layers of protection. They don't shut down because one unit fails. They are built to avoid single-point failure. This raised questions. Not about conspiracy, but about timing. Why did the halt happen during a major breakout? Why did it affect multiple metals? Why did it happen at the exact moment a huge physical delivery request was due? Analysts pointed out that this was not normal behavior for a stable market. Even if the cause was technical, the timing told a story. Silver was moving faster than the system could comfortably handle, and in that moment the system blinked. This brings us to the futures market. For months, margin requirements have been rising. Gold margins up, silver margins up. Each increase was meant to cool the market, but every increase failed. Silver kept rising. This is a sign of strong underlying demand. When higher leverage costs do not slow a market, it means real buyers are stepping in. Not speculators, not short-term traders. Real demand. Buyers willing to pay full value. Buyers who want metal, not paper. The technical indicators tell the same story. Silver did not just poke above resistance. It broke through decisively. It held the breakout. It accelerated. Each dip was bought. Each support level held. The 10-day moving average is firm. The 50-day moving average has been stable through months of pressure. This is not weak momentum. This is a strong, organized, steady move that reflects real demand and real stress. Now step back and look at the macro picture. Global debt is at record levels. Countries are struggling with deficits. Inflation has damaged trust. Interest rates cannot rise forever because debt service costs would explode. Central banks around the world are buying gold at the highest levels in more than 50 years. Nations are exploring new trade systems. The dollar is still strong, but global confidence is slowly shifting. In this environment, metals with monetary history gain importance. Gold rises first, but silver often rises faster once the cycle turns. Silver has always been a monetary signal. It moves ahead of major changes. It rises when the system weakens. It accelerates when people start losing faith in currency stability. It becomes more valuable when the world becomes more uncertain. That is what we are seeing now. Not panic, not fear, just recognition. Silver is being revalued because the entire monetary base is shifting. To understand how big this moment is, remember that similar patterns happened in the past. During the late 1970s, inflation was high. Confidence in the dollar was low. Oil prices were rising. Geopolitical tensions were intense. Gold started moving. Silver moved even faster. It shot from under $6 to nearly $50. This was not because of hype. It was because the monetary world was under pressure. The Hunt brothers played a role, but the underlying forces were already pushing metals higher. Back then, the government stepped in. Margin rules changed. Position limits were added. Liquidation-only orders were enforced. These decisions pushed the price down. But the long-term trend remained clear. The currency system had changed, and silver had exposed it. Today, the situation is similar but larger. Debt is larger. Deficits are larger. Monetary expansion is larger. The global economy is more interconnected. Technology demand for silver is far higher. Supply constraints are tighter, and confidence is more fragile. That's why today's silver move is not a one-day story. It is part of a bigger cycle.
Gold contracts that have stood for delivery, that's 2.397 million ounces, and plus 8,305 silver contracts, or 41,525,000 troy ounces issued and stopped so far, and the month has just started. It's also relevant to note that in November, which I would say was not normal, the silver deliveries ended the month at just under 20 million ounces, about 19.7 million, which it's really crazy because November is not a scheduled delivery month for either silver or gold. There was 1,267,000 ounces of gold delivered. Issued and stopped is the correct terminology. But you know, the first day, this month, the December contract, day one, we saw 7,330 contracts stand for delivery in silver, which is 36, almost 37 million. That's more than $2 billion worth. And although it's not a record, it's close to it. April was the biggest record of just under 12,000 contracts. But to see a 2-day, you know, that's day one, and 2-day obviously added more, but it's just insanity where there's already been 2.4 million ounces of gold and almost 42 million ounces of silver delivered in 2 days. This is the same type of volume that we've seen all year long. And, it's funny, you and I started talking about this in 2020 before anyone did. And now it's just mainstream mainstream in our business. And I think this will continue until it doesn't, meaning until stuff is just depleted. And it's becoming more and more obvious that this is an imminent deal. At the same time, you have one of, if not the largest short position in COMEX futures market, along with a massive short position in SLV, one of the largest ever. And at the same time, you have the LBMA, which is running on fumes. And, it's a situation where the delivery via mechanisms are breaking down. Almost 90 million ounces have been delivered off of COMEX this year, since October, pardon me. And I don't know, since October 1st, 90 million, it's accelerating at a level that I don't think people understand or take for granted. And I think the way that you break that up is just to simply say that, let's make an analogy, right? For years, everyone pretended that, let's call it a cardboard box was full of cookies. There's a picture of a cookie on the outside. And the thing of it, and they would trade that. But now everyone is saying, no, I want the cookies. And people are realizing that the box is pretty much empty. And when that happens, this pretend cookie game, which you could call the derivatives, falls apart. And real cookies, gold and silver, become much more valuable. And that's why prices are rising. And why the dollar and other currencies may look weak when the truth comes out. So, yeah, I think it's a big deal. There was this report that JP Morgan shifted its offices to Asia in the middle of the night, that they were told that the people had like 5 days to move their family and everything to Singapore. I believe that is false. So everything that I'm reading tells me that that's not true. I guess we'll find out and we will see, but I know a lot of people have been asking about that. The bottom line, then again, to me, is that the market runs on trust. And when you believe that you'll get delivery of what you were promised, and that trust has been built up over decades, then the system works. And you buy a contract, you can stand for delivery. The metal's there. That's why COMEX has set the price of gold and silver forever. And the analogy is like a bridge that handles a whole bunch of weight until it doesn't, like the 35W bridge in Minnesota that collapsed that I drove over 5 million times. And you're seeing that in London. You're seeing that in the COMEX now. And I don't know. I think that this is going to be a story that gains a lot of traction over the coming weeks and months. I think that the price of silver is just beginning. I really, truly, truly do. And that nonsense of a outage, a glitch and an outage of air conditioning at the CME, a cooling failure, is a bunch of crap, because only the metals markets went down. The other CME markets, like the bonds and the FX and the repo and the equity futures, well, they stayed online. It was a technical failure isolated to only one asset class, and low volume that day, yet the whole thing went down. To me, it just is telling you that things are breaking. And I don't know. I think that this is just the beginning. We saw 12.5 million ounces were transferred out of the COMEX registered category on November 26th. So, where's it going? Who's buying it? How caught are they? These are the things that I would be focusing on right now. To me, that's the most important thing to talk about today.
Your comment about the COMEX reminds me of what happened during the nickel market run-up a couple of years ago. Our mutual friend, our dear departed David Smith, talked to us about that at the time and said, this is a private club. They can change the rules anytime they want. It reminds me of George Carlin's statement that it's a big club and you're not in it. But any comments that you have about the fact that on Friday, when silver was breaking out to a new all-time high monthly close, that's when all this shenanigans seemed to happen when the trading was halted for 11 hours on the COMEX. Any comments from you about that?
I would just simply say that if a market loses trust in how prices are discovered, or if it can quickly shift the rules, so too will the price discovering. Will shift elsewhere. And to me, all roads lead to the same place, and that's Shanghai, which becomes the price mechanism for physical silver. It will take over for the COMEX. And, when you play these games, we've seen it now in London with the nickel market. We're seeing it here. It's what they did to the Hunt brothers. They changed the rules. They'll raise margin requirements. They'll do all of these things. But when you end up seeing, when you end up seeing a failure of trust, a massive breakdown in trust, I believe that shift will happen. And, it will kind of be like London losing its grip on oil pricing, and move to the NYMEX. And, they ran it for a long time. Now they're an afterthought. The same thing will happen here, I believe, that the world will be so angered, if you will, by the fact that this has been a game that has been played for a long time by the West, that it will move to the part of the world that, the center of gravity will move towards Asia, I guess is what I'm trying to say. So, yeah, I think that's going to happen. I don't know when, but ultimately, in a world of probabilities, I'd put a high level of certainty on that at some point, it just moves to the part of the world that is cash and carry instead of promises and rehypothecation. In other words, you buy in Asia, you pay your money, you get your bars, and out you go. And before you buy it, you have to buy a bar from one of the pre-approved refineries, and they laser etch the number of the contract that you have on that bar. There is no shenanigans there. It's all about shenanigans here in the West. Well, it's interesting. The technical analysis would say you take the cup and handle, when it breaks through the handle, which it has at over $50, that you take the top of the cup in 1980, which was 50, the bottom of the cup, which was $4 in the 90s, and the difference is 46. You add it to the top, and that would say $96 would be the next technical resistance level, if any, or that would be the projected next place to go. And if you take a 42-to-1 ratio right now, or even call it 45-to-1, where it's averaged for the last 100 years, the silver to gold ratio, even though it's been coming out of the ground for 5,000 years, it's 16-to-1, and now it's 7-to-1, meaning it's depleting in nature. The price ratio, largely because of, in the Western world, gold's role as a monetary metal and silver's role in industry, it's average about 45-to-1. So you take gold today at 42.40 and divide by 45, and what do you get? 42.40 divided by 45 is $95. Well, isn't that interesting? That would be where it would tell you to go, where you take the top minus the bottom, which is 46, add it to the top, that would say $96. So, if you were to see silver at the end of the year at $96, it would not be crazy at all. And if you take 42.40 and divide by 7, it's going to be somewhere around $600, 605. As insane as that sounds, that would match the geologic footprint right now. So yeah, I think silver is the asset of a generation. And I want to always hammer it home. I'm not telling people to buy it to become wealthy. It is wealth. And the biggest money in the world is showing you that. The sovereign wealth funds and the central banks, who have now largely reclassified silver a critical mineral. The U.S. government has. The EU did it in 2023. China just did it, and they are restricting exports. And China, as we've said ad nauseum on your show, the second largest producer in the world, is flying to Peru and Mexico and buying doré and concentrate, paying twice what the rest of the world will, and ship it back to refine it. If they're the second largest producer, then why the hell are they doing that? Because it's worth far more than the currency used to buy it. The prices are wrong. They've never been allowed to reach full price discovery when you have the largest concentrated commodity, concentrate short position of any commodity of the 1,000 plus traded on COMEX for years. It just speaks to the why. Why would it be the largest short position in this tiny little commodity? It's not for these banks to make money, is it? Sure, they do, but is there something bigger behind it? And we've talked about that forever. So yeah, what we're witnessing right now is the inability of the players that have used the Western dominance, which is big checkbooks, big pockets of cash, to continue to suppress the price naked. It's now an existential threat. And you're seeing that. The rumor is the reason they stopped is there's one big trader who took possession and would not roll it over a stamp for cash delivery, perhaps an Asian trader who wanted over 400 million ounces of silver. Give it to me. And so, all of a sudden, the cooling breaks down over Thanksgiving in one of the most thinly traded markets of all. So there's virtually no activity, but just those servers broke down. Right. So the point of it is that this signals, just like the LBMA said, sorry, it's not L plus or T plus 1, it's T plus 8 weeks. Right. We don't have enough manpower or trucks. The Western system is crumbling under their own narrative, and they are losing trust. And that ain't good when a system is completely built on trust and it starts to, as the water recedes, what's the old adage, you see.
Warren Buffett said, when the tide goes out, you get to find out who was swimming without swimming trunks. Yeah.
Right. And I think that's going to be a grotesque picture before it's all said and done. And that's why I think you're seeing a different narrative unfold amongst these banks, that maybe the game is over, and survival would mean breaking ranks and covering and getting out. You see one of those European banks do that, and then the whole game just implodes as the price skyrockets and shorts get squeezed and they cover, pushing the price up higher. This is a big deal, and I think it's just beginning right now.
The question now is not whether silver will rise. The question is how the system will respond when the pressure continues. Will exchanges raise margins again? Will large traders adjust their positions? Will physical demand accelerate? Will industrial users secure future supply early? These reactions will shape the next phase of silver's movement. One thing is already clear. When the exchange halted during the breakout, it showed stress, not in silver, but in the infrastructure used to price silver. When pricing systems strain, markets look to physical metal for truth. And once physical demand leads, paper markets follow. This is why analysts like Andy Schectman say silver is entering a new stage, not a hype stage, a reality stage, a stage where long-term shortages meet real-world demand and a changing monetary environment, a stage where price discovery returns after years of suppression, a stage where silver begins to reflect its true role in the global system. And that leads to the bigger question. If this is only the beginning of silver's revaluation, what does the future look like? What happens if currencies weaken further? What happens if industrial demand keeps growing? What happens if inventories continue shrinking? What happens when the next liquidity wave arrives? What happens when the physical market takes full control of price? These are the questions investors and analysts are asking right now. Not out of fear, but out of preparation. Silver is not just a metal. It is a measurement. It measures confidence. It measures supply stress. It measures monetary stability. And today, silver is showing that the world is entering a new chapter. We are witnessing a shift that takes place only a few times in a generation. Silver is moving differently because the world is changing. The financial system is changing. The supply chain is changing. Technology demand is changing. And silver is reacting the way it has always reacted when big cycles begin to turn. This moment will be studied for years, not because of the price alone, but because of what it revealed. The system hesitated. Silver did not. The market blinked. Silver did not. The infrastructure slowed down. Silver sped up. Now the responsibility moves to us, to stay informed, to understand the cycle, to pay attention to the signals, to separate noise from truth, and most importantly, to recognize that what we saw today was not an accident. It was a preview. The next phase of this story has not been written yet, but the direction is becoming clear. Silver is stepping into its role again. Quietly, steadily, honestly, and the global financial system will have to adjust around it. If you want deeper insight into these shifts and you want to follow this cycle as it develops, make sure you stay close to the analysis and stay engaged with the conversation. The next steps will matter even more than today's move. The cycle is changing, the world is changing, and silver is once again revealing the truth that has been hidden for far too long.